Hello guys, welcome back to another lovely trading video. In this one we're going to be doing some in-depth stock analysis on CHTR, which is Charter. Reason for the analysis on this, as on Friday it did close up 3%. It is currently in a low risk long area and does look like it's getting its kind of reversal point, so could be pushing into a strong uptrend. So as always, we start off on a clean daily chart. See, is there any gaps that need to be filled? Because we try and use these gap fills as profit targets, because these are usually areas where if you're looking at a gap onto the upside, then you get a pullback, and if you're looking for a gap to the downside, you expect buying pressure to come in. Looking straight at Charter, we do have a gap fill at kind of this 740, kind of 742 area. You see it almost filled the gap on this move here, but didn't quite fill it, so we would expect still somewhat of a reaction. Probably wouldn't be as strong as a normal gap fill, just for the reason that it nearly got filled. So a lot of the selling pressure here, for example, came in early, but we would still expect some if it comes back up to this 740 level. Now we did have a gap fill at that level, that's now been taken, and we can see the rest of the gap fills have already been filled. So really the only gap fill we're looking at is around that kind of 240 to 242 level. Now we'll go over to standard deviation charts so we can start seeing where our price targets. And as we can see right now, and we did post this in the Discord if you were in there, around 627 to 620 we had our low risk long in this second deviation, and we did and that's where we did kind of start getting long. You can see it did actually push down a bit further to the half deviation on the daily, which was the psychological level of $600, which makes sense why we're getting its strong bounce now, and it would make sense for that to kind of be its reversal level. So we do actually expect Charter to keep going up and push towards that statistical mean. So right now, again, we are in a low risk long if you're trying to kind of chase a trade, but we have kind of gone past its optimal buy zone, just as a heads up. But we will be locking in profits and kind of moving our stops coming into the 670 area and 682. Reason for that, first deviation on the daily and the 4 hour. So you expect some sort of a pullback coming into this level. Doesn't mean it's going to continue lower from here, but we do expect a pullback. And so the reason we lock in some profits and usually move our stop is if it does end up trying to continue down, we don't want to turn something we're up so much on into a losing trade. For example, if we get like an average between the two, so around 263, we can see even to that first deviation on the 4 hour, which is the first one, that's a 7.5% win. So that's why we lock in profits, or at least move our stop coming into this level, because with a trade we're up 7.5%, we don't want to be turning that into a loser. Now, we won't be locking in all profits here though. We'll be looking to lock in the final amount of profit coming into this 720 area. And the reason for that is the statistical mean on the 4 hour. And we always use this, or at least I personally do, use this statistical mean as an area to lock in all of the profits, or whatever's left. The reason for that is stocks try and push back to the statistical mean. So if we are already at the statistical mean, then it's kind of a gamble whether it will go up or down. So that's why we tend to just lock in profits when we come into here, just to kind of stay in the trade for the shortest amount of time possible, while still making the biggest amount of gains kind of possible. Kind of just like an optimal trade, we would say, because it may go higher, but for that you have to hold back through a pullback. You're taking the added risk that it could easily reverse at this level, and all of that. So we tend to just lock it in, keep it safe, and we can make good gains at the same time. So kind of 720 is where I'd be looking to be completely out of this trade, but if it does continue high, or you're looking to kind of stay at it higher, 740 statistical mean on the daily chart, and also the gap fill. So that is definitely where, again, if you were continuing to be long in the trade at this point, we would definitely be locking in some profits there. Now, again, if you're looking to go even further, 770 or 769, 795, 820, 852, 870, 908, and 965 at the very extreme. I think we're missing one at 920. So all these targets, again, you can use on the upside depending on how long you want to stay on the trade, and this will also depend on whether you're day trading, swing trading, kind of even long-term swing trades, or even investments. You're going to be looking for different levels, obviously, but if you're looking kind of for normal term, kind of short-term swings or day trades, we will not be looking to trade past that 720 level, because from there, again, it turns a bit more into a gamble. Now also one thing as well, we always like to kind of look at the standard deviation direction, and we can see on both the 4-hour and the daily they are pointing upwards. This is a good sign. It makes our taking the stop long even less risk, because the overall trend for the past year and 180 days has been a strong uptrend is what that shows us. So taking it long is then a lot less risky. And that's why we can then look for kind of stronger targets. The good thing as well when deviations are facing up is it means our profit potential near enough every day will increase, because the deviations will push upwards slightly every day. For example, right now you can see on the 4-hour our final target is kind of that 719.58. But you'll see when markets open Monday, this most likely will end up being higher. This could be around 720. But you think if it takes a week or two to get to that level, by the time we actually get to that level, it will probably end up being 724 or 725. So it's just that added bonus of trading a stock in an uptrend, taking it long instead of short. And so looking at the overall kind of profit potential in this trade, if you got in when we said in the Discord at around that second deviation, we're looking for a max kind of trade of around 15.5%. If you end up hopping in now, which would be considered a bit more of a chasing trade, but as we are below that first deviation, still considered low risk, we would then be looking still for about a 10.5% trade overall. So I hope you enjoyed the breakdown on Charter. I hope that gives you some insight into the stock. If you did enjoy the video, don't forget to drop a like and subscribe, and that's it. Peace.